Big breaking update for all IQD and VND holders. Are we on the verge of a global currency shift? Something extraordinary may be unfolding right now in the world of global finance. According to a wave of new reports and credible leaks, both the Iraqi Dinar IQD and the Vietnamese Dong VND could be on the brink of a long-anticipated revaluation event. If the chatter coming from inside central banks and international institutions is accurate, the next 24 to 48 hours could see one of the most consequential monetary moves in decades. For investors who have patiently held these currencies for years, this could be the turning point they've waited for. Welcome back to Currency Corner, where we separate speculation from signal, bring you the latest intel, and decode what's really happening in the world's currency markets. Buckle up, this might be the most important update you'll read this year. 1. Late-night meetings raise eyebrows across Baghdad and Hanoi over the past week. Both Iraq and Vietnam have reportedly hosted a series of marathon policy meetings involving top central bank officials. Sources inside these circles describe the sessions as highly confidential and unusually intense. These are not ordinary financial briefings. According to insiders, what's on the agenda is nothing less than a currency rate adjustment, potentially a complete revaluation of the IQD and VND. The pace and secrecy of these meetings suggest that key decisions are being finalized at lightning speed, possibly for immediate implementation. Even more telling is who's been spotted participating in these discussions. Multiple independent sources claim that representatives from the International Monetary Fund, IMF, and the Bank for International Settlements, BIS, often called the Central Bank of Central Banks, have been directly involved. Their presence signals that this is not an isolated national policy move. It's likely part of a coordinated international realignment of currencies. When the IMF and BIS sit at the same table with emerging market finance ministers, it's usually a sign that something significant is about to shift. 2. The disappearing press release that sparked a frenzy, adding more fuel to the fire. An official announcement reportedly appeared briefly on a central bank website late last night, before being abruptly taken down. The short-lived statement mentioned the finalization of currency reform procedures, language that immediately set off alarm bells among analysts and traders. Such terminology is rarely used unless a government is preparing for a major monetary event, such as redenomination or revaluation. Within an hour, the notice vanished, but screenshots began circulating among foreign exchange analysts and private investors. Was it a mistake, a premature announcement, or a deliberate signal sent to insiders? Whatever the case, the timing of its removal, combined with intensified behind-the-scenes activity, suggests a level of coordination that goes far beyond coincidence. 3. Unusual market behavior and silent media. Across Gulf and Asian markets, traders are noticing abnormal patterns. Exchange houses in the Middle East report an uptick in demand for Iraqi dinar, while Vietnamese state media has gone conspicuously silent about currency topics, a possible attempt to manage public expectations ahead of major news. In the interbank foreign exchange market, liquidity spreads for both currencies have widened suddenly, indicating that large institutional players may already be positioning themselves for an upcoming shift. Even more curious, several private trading platforms that handle large foreign currency orders have temporarily suspended new transactions, citing vague reasons such as system upgrades or liquidity synchronization. Such synchronized pauses are rarely random. The last time the global FX market saw similar moves was during the 2015 Swiss franc revaluation, an event that shocked global markets overnight. 4. Why this moment feels different. Longtime currency watchers are understandably skeptical. Over the years, the IQD and VND revaluation story has been filled with rumors that failed to materialize. But this time, multiple indicators align in a way that feels decidedly different. Central banks are unusually active in after-hours meetings. Global institutions are reportedly present at the table. Market liquidity patterns are shifting in real time. A credible official document briefly surfaced and was retracted. If these developments were random, we'd likely see confusion and mixed messages. Instead, the signs point toward coordination, the hallmark of a controlled currency reform rollout. 5. The tiered exchange theory, who goes first? Analysts familiar with large-scale monetary transitions believe that, If a revaluation occurs, it may unfold in stages or tiers, rather than all at once. Under this approach, large institutions, sovereign funds, and high-net-worth investors would be given early access to exchange their holdings at special contract rates. These rates would likely be higher than the general market rate and available only for a short time, perhaps 24 to 72 hours, before the public phase begins. This tiered rollout allows central banks to control liquidity, avoid speculative chaos, and manage the flow of new capital into the system. For individual investors, it means timing will be everything. Those who are prepared with documentation, verified holdings, and clear exchange plans could potentially capitalize on early opportunities. Those who hesitate may end up with lower rates once public exchanges open. 6. Early reports from U.S. redemption centers adding to the intrigue. Several sources within the U.S. banking network claim that private redemption centers have begun operating quietly in major financial hubs including Dallas, Miami, Houston, Atlanta, Los Angeles, Chicago, Reno, and New York. These facilities, often rumored but rarely confirmed, are said to be processing early participants under strict security and confidentiality agreements. Eyewitness accounts describe procedures that sound more like military operations than routine financial transactions. Personal electronics confiscated upon entry, multiple forms of ID verification and asset documentation, non-disclosure agreements, NDAs, signed before any currency exchange. Insiders assert that these are not test runs. Participants reportedly leave with verified deposit confirmations, showing funds already cleared in their accounts. If verified, this would represent the first tangible evidence that a phased revaluation event is indeed underway. 7. Why the secrecy? One of the biggest questions in this unfolding story is why the cloak and dagger secrecy. Experts point out that sudden currency shifts can create massive volatility. If a government announced a 100% or 500% increase in currency value overnight, speculative chaos could erupt in financial markets. Therefore, a controlled, quiet rollout, beginning with limited tiers and NDAs, allows authorities to stabilize systems, update banking infrastructure, and manage liquidity before the broader public becomes aware. In essence, the NDAs and secrecy are tools for stability, not deception. 8. Global implications of a dual revaluation. If both Iraq and Vietnam are indeed revaluing their currencies in a coordinated move, the ripple effects could be global and immediate. For Iraq, a stronger dinar would mark the country's return to financial sovereignty after years of reconstruction and inflation management. It would also boost Iraq's purchasing power in global oil transactions, reduce dependency on the US dollar, and elevate Baghdad's influence within OPEC. A robust dinar could attract foreign investors, accelerate infrastructure development, and signal to the world that Iraq has fully stabilized economically. For Vietnam, Vietnam's dong has been artificially undervalued for years to support its export economy. A revaluation would recognize the country's real economic strength, rewarding decades of industrial growth, trade surpluses, and foreign investment inflows. Such a move could reposition Vietnam as a premier manufacturing alternative to China, drawing even more global capital and accelerating its rise as a top-tier Asian economy. 9. The broader economic chain reaction. If both currencies appreciate sharply, global financial systems would need to rebalance reserves and adjust portfolio exposures. Central banks holding dinar or dong in small quantities would suddenly see those assets multiply in value. The US dollar might experience short-term volatility. Some analysts expect a temporary dollar surge as investors flock to safety, while others predict a gradual rebalancing away from dollar dominance if the dinar and dong become stronger players in regional trade. Meanwhile, precious metals like gold and silver could spike as investors hedge against uncertainty. In past currency realignments, gold prices have risen sharply as portfolios shift toward tangible assets. Cryptocurrencies could also benefit. If newly wealthy investors seek diversification, digital assets such as Bitcoin and Ethereum could see short-term surges in demand and liquidity. 10. Could this be the start of a global monetary reset? Some economists interpret these moves as part of a broader rebalancing of global financial power, a so-called monetary reset. Emerging economies, particularly resource-rich or manufacturing-strong nations like Iraq and Vietnam, may be aligning their currencies to reflect real economic output rather than artificially low valuations. This transition could gradually reduce global dependency on the US dollar, diversify international reserves, and set the stage for a more multipolar currency system, one where several strong regional currencies coexist with the dollar and euro. 11. What investors should be doing right now with speculation running high. It's crucial for individual investors to stay grounded and prepared rather than emotional. 1. Stay calm and verify sources. The internet is full of noise. Only rely on updates from verified banking or government channels. 2. Organize documentation. Ensure you have proof of purchase, serial numbers, and receipts for your currency holdings. 3. Know your exchange plan. Research which banks or authorized centers handle foreign currency redemptions and how to make appointments. 4. Consult a financial professional. Not all banks participate in exotic currency exchanges, and rates can vary. Seek advice before acting. 5. Be ready but rational. If a revaluation occurs, timing will matter, but so will patience and discernment. Preparation, not panic, is the difference between opportunity and regret. 12. Why this story still matters. Even if delayed, even if the rumored 48-hour window doesn't materialize exactly as described, the underlying trend remains powerful. Iraq's economic recovery, expanding oil output, and stronger fiscal management have made a dinar adjustment increasingly likely. Vietnam's surging manufacturing base and trade surplus continue to put upward pressure on the dong's fair market value. Whether it happens this week or later this year, the fundamentals support a revaluation trajectory, meaning that this story is far from fantasy. 13. The emotional roller coaster of currency investing. Let's acknowledge the reality. Investors in the IQD and VND have been waiting for years, even decades, often facing ridicule or skepticism. Many have held onto their positions through false alarms, scams, and misinformation. Now, with credible indicators aligning, it's understandable that emotions are running high. Hope, disbelief, and excitement all mix together as holders watch every news update for confirmation. But the wisest investors know this. Discipline beats emotion every time. The ones who stay calm, document everything, and move strategically will be best positioned whenever the real event unfolds. 14. The coming hours, and what to watch for over the next few days. Here's what to monitor carefully. Official announcements from the Central Bank of Iraq, CBI, or the State Bank of Vietnam. Statements from the IMF or BIS that reference currency reform or market stability. Sudden website changes or new financial circulars posted publicly and then withdrawn. Trading platform pauses or updates, especially in Forex markets connected to Asia and the Middle East. Each of these could be a breadcrumb leading toward confirmation of what many believe is already in motion behind closed doors. 15. The bigger picture. A new financial era. If confirmed, this dual revaluation could become one of the most important monetary events of the 21st century. It would signify not just the rise of two currencies, but the evolution of a new financial order where developing nations assert greater control over their monetary destinies. A stronger dinar and dong wouldn't just enrich holders. They'd represent a shift in global balance, a recognition that real economic power is no longer concentrated in the West alone. For Iraq, it's about redemption and resurgence. For Vietnam, it's about ascension and recognition. For the global system, it's about adaptation to a new reality. Final thoughts. Whether or not the next 48 hours deliver the long-awaited confirmation, one thing is undeniable. The financial world is watching Iraq and Vietnam closer than ever before. The pieces are moving: central banks, global institutions, market patterns, and silent signals all suggest that a major change is coming. For investors, the key is to stay alert, stay informed, and stay ready. The opportunity of a lifetime may be closer than anyone imagined. When it comes, it won't just change exchange rates. It could redefine the future of money itself. Disclaimer: all content provided by IQD Global Intel is for educational and informational purposes only. We are not financial advisors and do not provide investment, trading, or banking advice. Viewers should always conduct their own research and consult with a licensed financial advisor before making any financial decisions.